All right, everybody. So today we are going to talk about something that many of my audience members have asked me about, and that is gambling tax, specifically how gambling tax is applied in the United States. So in this video, we'll be covering topics such as what is gambling tax, how much is it, where is it applicable, what kind of record keeping do you have to do to claim your wins and losses for tax purposes? Why is it that people who are residents of some countries pay no tax while others automatically have their tax withheld if they're gambling in the United States, as well as what is the difference between being a professional gambler and just a recreational gambler? I just want to make the disclaimer right now that I am not an accountant, and this video is by no means intending to give tax advice to anybody. It's just a general discussion on gambling tax in the United States. If you are looking for tax advice, I highly recommend dealing with a professional accountant. So with that out of the way, in the United States, there is gambling tax on winnings. Typically, that tax is a flat rate of 24% for recreational gamblers. However, if you win a substantial amount of money, for example, if you win millions, I believe that tax goes even higher because your income is higher. Now, I'm sure those of you who watch a lot of my videos and live streams notice that whenever I do have a significant big win on a slot machine, a lot of the time I get what's called a hand pay. Now, a hand pay is a win of $1,200 or more on a slot machine that is automatically reported to the IRS for tax purposes. When you get a hand pay, you have the choice as a U.S. resident of having the tax withheld on the spot or not having the tax withheld. Additionally, if you win 300x or more on a table game, you are also subject to a hand pay, and those winnings are automatically reported as well. And the same story applies. You could either choose to have the money withheld, the tax money withheld, or not. Now, the threshold for a hand pay, I believe that was set in 1977. Now, I think we could all agree that in 1977, $1,200 was worth a hell of a lot more than it is today. In my opinion, I don't think we should have gambling tax at all, but $1,200 is just utterly ridiculous. The way that the rules regarding gambling tax applies, as far as I'm aware, is that you could only deduct gambling losses against gambling winnings. So even if you lose significantly more money between January 1st and April 15th of the next year, you will still owe tax money on the winnings from the previous year where you were up. So keep that in mind. Now, in addition to this, there are extremely onerous record-keeping requirements in order to prove that you've actually lost the money that you've lost. You see, a lot of events that take place in the casino are automatically reported to the IRS. These range from getting a hand pay, which is of course reported, a big table win that's 300 times or more, or even a big cash out of chips. I believe it's over $3,000. I believe that the casino maintains records of that, of cash outs over $3,000. So it's up to the player to keep an accurate diary of their wins and losses. So here's what the IRS actually says about keeping records regarding your gambling wins and losses. In my opinion, they're pretty extensive. So here it is. All right, so according to the IRS, you must keep an accurate diary or similar record of your losses and winnings. Your diary should contain at least the following information: the date and type of your specific wager or wagering activity, the name and address or location of the gambling establishment, the names of other persons present with you at the gambling establishment, the amount you won or lost. In addition to your diary, you should also have other documentation. You could generally prove your winnings and losses through Form W2G, certain gambling winnings, Form 5754, statement by persons receiving gambling winnings, wagering tickets, canceled checks, substitute checks, credit records, bank withdrawals, and statements of actual winnings or payment slips provided to you by the gambling establishment. This information is found in Publication 529, Miscellaneous Deductions. So I'm sure you're all wondering, does that mean that every single game you play, every single time you deposit money into a game and then withdraw money, you have to keep a record of that? As far as I'm concerned, yes. And since I gamble a lot, the last thing I need is for the IRS to only, to look at the automatically reported winnings and say, oh wow, this guy must have won hundreds of thousands of dollars. Where's our money? So I don't take any chances. I keep a very detailed diary, and literally every time that I'll put like $300 in a slot machine, I'll record it. So for example, on a night out of gambling, let's say I'm gambling in downtown Las Vegas. If I put 300 in a slot machine, I win 450, I'll record that. I'll take, if I take the 450 and then I go buy into the blackjack table, that's another record that I'm keeping. If I lose that, let's say, I take more money out, play a slot, then I get a hand pay, and then I put it into another slot, lose it all. The IRS will automatically see the amount that I won on a hand pay, but they won't see the fact that I might have lost $1,000 over the course of the night. So in my opinion, it's very important to keep very detailed records to not take any chances. Pretty ridiculous, I know, for people who are going out to have fun gambling. I do really wonder how many people actually do that. I doubt that it's the majority, but I could be wrong. Let me know in the comments if you actually keep those kind of records when you're gambling. So quite a few people have asked me how residents of other countries are treated tax-wise while gambling in the United States, and the answer to that is it depends on the country. Being Canadian, I could tell you that one of the worst tax situations is Canadians gambling in Las Vegas. If you are a Canadian resident and you get a hand pay, $1,200 win or more on a slot machine, you are automatically subject to a 30% withholding, which is crazy in my opinion. So for example, if you get a $2,000 hand pay, you're only getting $1,400 of that. Now, of course, if you keep proper records, you could file the paperwork to get a refund, assuming you were a loser that year, to get that money back. But you could have fun waiting for that because it does take some time. Contrast this with people who are residents of countries that have tax treaties with the U.S. Some countries actually have a treaty where the U.S. doesn't withhold anything, and their residents are not subject to gambling tax in their countries because they just don't have gambling tax. There is no gambling tax in most cases for Canadian residents in Canada, but unfortunately, the IRS will still withhold the 30% if they win it in the United States. So here's the list of countries whose residents I believe are not subject to mandatory withholding. Austria, Belgium, the Czech Republic, Denmark, France, Germany, Ireland, Italy, Japan, Russia, South Africa, Spain, Sweden, and the United Kingdom. I have gambled in the United Kingdom in the past, and from my understanding, it's like Canada. There is no tax on gambling winnings for UK residents in most cases. So they have a great situation where they don't get withheld and they don't pay gambling tax as far as I know. I'm not sure about the other countries. But anybody who happens to be from any of those countries that I listed and has played in the United States, feel free to enlighten me on that subject. All right, so the final topic that I want to discuss is the concept of a professional gambler. Now, from what I understand, a professional gambler has to file paperwork with the IRS stating that gambling is their only source of income, and once that's approved, their gambling winnings are treated like regular employment income, so the tax situation is a little bit more favorable for them. In addition, they could take deductions for other expenses. However, I don't believe they could carry over gambling losses in a given year to the next year like you would when it comes to capital gains situation. So for example, for an investment, if you lost money on an investment, you could carry it over as a capital loss. I don't believe you could do that even if you are a professional gambler, but anybody who's in that situation, who's watching this video, feel free to correct me if I'm wrong. So yeah, that pretty much covers it. My opinion is there should be absolutely no gambling tax at all. You know, we're talking about money that has already been taxed as far as income tax goes. I guess you could argue the same thing about capital gains, etc. But gambling tax, the way the rules apply to gambling tax, in my opinion, it's just the worst tax. I mean, you can't carry over a loss. And when it comes to foreign visitors playing in the United States, the fact that the mandatory withholding threshold is $1,200, which hasn't changed since 1977, just really discourages it really discourages people from coming to play in the United States if they know about it. And for those who get that rude surprise when they win anything substantial, it probably, I would imagine it would sour their experience overall. But let me know in the comments. Let me know what you guys think. Should there be a gambling tax? Should there be a gambling tax at all? Should it be lower? Should it be higher? Let me know. So I hope you enjoyed the video. If you like this content, I will be coming out with some more videos discussing my thoughts on various topics, usually related to gambling, possibly not. So like and subscribe, and I will see you in the next one. Bye.